Hello, very good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst for OANDA Asia Pacific. Yep, so let's get started. Today will be the Monday, 18th of September, a brand new week. So welcome to today's Daily Dose of Market Insights by OANDA. So before we start our usual daily market dose, so let's take a look at the disclaimer slides first. Okay, leverage trading is risky. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. All right. So now, as usual, this will be our agenda for our daily dose of market insight. So a recap of events and highlights of what happened last Friday, and as well as key data releases for today and events to watch out for. And most important, we run out with the short-term technical analysis outlook for the various asset classes that actually exhibit interesting configuration that I'd like to share with you all earlier. All right, so now let's take a look at what happened last Friday. So as you all know that last Friday, the US session actually ended in the red for the major stock indices. So this was actually the performance of the S&P 500. So I could see over here is that the S&P 500, the mega cap US stock, that means we talk about the tech stocks, all actually ended in the red and actually underperformed. You talk about Microsoft down negative 5%, the high flying AI stock, Nvidia down negative 3.7%, Amazon down negative 2.9%, and Apple negative 0.41%. So that actually kind of created a negative feedback loop into the major US stock indices. So all ended in the red on last Friday, negative. The SPX actually down negative 1.2%. The Nasdaq 100 down negative 1.75%. The Dow Jones Industrial Average down negative 0.8%. And the Russell actually down negative 1.05%. And also rounding up, there are actually two key factors that actually causes this negative performance on the US stock market on last Friday, due to the fact that we also have a rising US Treasury yield. And also to cap up with that, there's the key, one of the key fundamental data, which is the flash number of the US Michigan flash sentiment data for September also came in below expectation. So now let me share with you what happened on the US consumer sentiment data on Friday. So now let me share my screen again over here. So let me hide myself so you all could actually focus more on the screen that I'm going to share with you. Okay, so this was last Friday over here. All right, let me expand so you all could see much bigger. Okay, so this was the US consumer sentiment compiled by the US University of Michigan in US. So this is one of the key sentiment data that market participants is watching. Why? Because as you all know that US economy is driven by the services sector, which is primarily also dependent on sentiment. If the sentiment is strong, that means the services sector will be more robust. So if you look at the US consumer sentiment, this is the preliminary figure released on last Friday for September. The number came in at 67.7, below consensus of 69.1, and also below the previous month of August at 69.5. So if you look at the trend of this consumer sentiment for September, the flash figure, it has been inching downwards in the last 2 months. All right, so it seems to be that the trend has been pointing downwards, so i.e. that actually suck up a bit of bullish sentiment on the US stock market. But most importantly over here is that what we are seeing right now is actually the let me share with you very quickly, is the US Treasury yield, the 10-year yield that has been inching upwards on last week. All right, so in today Asia session, the US Treasury attempt to actually go much higher again before coming back down a fair bit. So as you all know that a rising US Treasury yield is actually pretty much detrimental to risk assets, especially long duration equities that are pretty much dependent on growth, especially on the technology stocks itself. Those are actually growth stocks. So that actually see a underperformance of the US technology sector. That actually explained the Nasdaq 100 underperformance on last Friday as it closed down by negative 1.75%. But most importantly, I want to share with you all is the US major stock indices for last week actually ended close to a 5-day low. But most importantly, the performance actually closed down. They ended the week below the 50-day moving average, which is pretty much weaker. So let me start off with the S&P 500 index. So this is the weekly chart of the S&P 500 index, but I overlay with the 50-day moving average and the 200-day moving average. So we could see over here is that for last week, okay, even though intraday it attempted to push up above the 50-day moving average, but for the end of last week, that means last Friday closing prices, it actually closed below this 50-day moving average for the second consecutive week over here, which is pretty much a negative in terms of sentiment. Very similar for the Nasdaq 100 as well. So this is all the cash market. We're talking about the not the futures or the CFD, the cash market. So looking into account of only the US session open and the close. So similar for last week, the Nasdaq 100 also managed to close below the 50-day moving average based on the weekly price action of the chart, and also on the Dow Jones Industrial Average as well, managed to close below the 50-day moving average for the second consecutive week and ended last week with a weekly doji candlestick and looking to retest a major ascending trend line support level at the 13 October low. So pretty much hesitant for the bulls, but seems to be the odds is more skewed towards the bearish camp at this point in time. And also the Russell 2000 being the weakest over here, it has already closed very clearly between the two consecutive week below the 50-day moving average and looking to retest the 200-day moving average. So didn't shape higher high, continue to shape lower high instead on the Russell 2000 weekly candle. Okay, so all in all, is a pretty much pretty much weak price action on the benchmark US stock indices. If you look into account of the cash stock indices on a weekly basis that I shared with you all earlier on this candle, on their weekly price action on the various 4 major US stock indices. Now, going ahead, what are the key economic indicator to watch out for? So for today, right, just a while ago, 8:30 a.m. for today, we have very key export data, the non-oil export data for Singapore. Why is it important? Because Singapore is one of the major export hub in globally. So our export data came in below expectation of negative 15.8%. It came in at negative 20.1% year on year, almost the same as last month data of negative 20.3%. So if you look at the trend of our non-oil export, it's been pretty much trending downwards. So it's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 consecutive months of double-digit decline, and came in way below expectation of negative 15.8%. So what does it imply? It implies to us that the external economy is still weak, global demand is still weak. That means, i.e., we are still potentially could be on a stage of what I call stagflation scenario. That means pretty much sticky inflationary data, sticky inflationary with low, or what I call it, very lackluster demand side economic growth. That means high inflation data, sticky inflation data on the high side, and also low demand growth as well. So that means we're talking about a period of low growth, high inflation, okay, which is actually does not bode well for risk assets. All right. So now with that in mind, what other data to watch out for today? So today there is no key data coming up in the US. Other than you have a ECB official speaking later on at Singapore time at 11 p.m. All right, but bear in mind the key action will come on in the later part of this week, where we will have the central bank meeting of Fed. So Fed will come in at Wednesday time, US time, that is 2 a.m. Singapore time on Thursday, and followed by Thursday in the afternoon Singapore time, we have the Bank of England monetary policy, and on Friday we have the Singapore time at 11 a.m. we have the Bank of Japan monetary policy decision. So we will we'll cover this more in greater detail as in our subsequent daily dose of market insights. All right. So without further ado, now let's take a look at the short-term technical outlook chart I'll share with you all. So now I'll start with the FX market first. So let's start with the FX market. So on the FX market over here, so this is the current rolling 1 month performance as of today, 18th of August, Asia session. So we could see over here is that it's the alligator mouth again that I cover, or I reiterate on last Friday, we covered dollar is strengthening against the European currency, the sterling, the Swiss, and the euro. A bit of a sideway on the yen, but not so much against the Asia currency that is very tied very closely to the CNH with the Chinese yuan. So what I could see over here is that the dollar is not strengthening much against the Chinese yuan. That it has a spill over towards the Kiwi, the Aussie, the CAD, and as well as the Sing dollar, because all this currency has a close tie with the Chinese yuan. So as long as the Chinese yuan is not weakening much against the dollar, we do not see much dollar strength against the Sing dollar, against the Aussie, and against the Kiwi. The CAD is pretty much in line with the current strength in oil prices right now. So that's why the dollar strength is being tempered off in against the Canada dollar. All right. So with that, let's take a look at the FX pair I share with you all. Let us start off with the dollar yen first. Okay, so for dollar yen over here, what we could mention over here is on last Friday, we have a key short-term pivotal resistance at 147.90 during last Friday session, and today Asia session it tend to break up, test this level but refuse to break above this level. The RSI tended to inch much lower over here. It tends to actually slope downwards. All right, so indicating to us that there is a bit of what I call hesitant in terms of strength to push much higher on the dollar yen. So are we still using 147.90 as my key short-term pivotal resistance, looking for a test on the short-term support level at 147 figure level. So still maintaining that bearish bias on the dollar yen, 147.90 key short-term pivotal resistance. Look for a test on the 147 figure level. We're also coming very close to the 200-day moving average as well. Okay, however, if we start to see an hourly close above a clear breakout above 147.90, then this short-term bearish bias will be invalidated to see a squeeze up to test that 14840 slash 14885 key medium-term resistance on the dollar yen. All right, so now what's next cooking on the Aussie dollar? So on the Aussie dollar, we are still using the 64 figure level as my key short-term pivotal support level. Aussie dollar today morning Asia session, this is the hourly chart. So what I did is I will overlay the 20-day moving average on the hourly chart, still holding above that 20-day moving average and above that key short-term pivotal support at 64 figure. On the hourly chart, if you could see these two rounding bottoms, it seems to me that it's still tracing out that minor bullish double bottom configuration on the Aussie dollar. Bear in mind, this is the hourly chart, not a daily chart. So all in all, if we start to see 64 figure level holds, potentially we could see a test, upside push to test the neckline resistance of this minor double bottom configuration that is in place since 17 August, resistant at 65.10 figure level. So as long as 64 figure level holds short-term pivotal support level on the Aussie dollar, potentially we could see a test in first step, bullish bias in first step towards 65.10. However, if we start to see a clear breakdown below 64 figure level, that means hourly close below 64 figure level, that is the pivotal support. These short-term bullish buyers will be invalidated to see a retest on 5th of September swing low, at which is the support level at 63.60. So still maintaining that short-term bullish buyers on the Aussie dollar, given the fact that right now the Chinese yuan is pretty much lack of what I call further weakness against the dollar, as I show you on the 1 hour, on the 1 month rolling performance FX charts earlier on at the start of this before we start discussing the short-term technical outlook on the FX market. All right. So now for the European currency, if we go to the European currency over here, the European currency still remains weak. On the euro dollar, that means the euro versus the USD, I'll be still using 1.0707 as my key short-term pivotal resistance for today. Still looking for a potential push down to test the next support level at 1.0585. However, if we start to see a break up, hourly close above 1.0707 key short-term pivotal resistance, potentially we could see a squeeze up to retest the next resistance level at 1.0770 level. That's for the euro dollar. So then for the sterling dollar, the sterling pound over here, so we'll be using 1.2460 as my key short-term pivotal resistance level, also close to the 200-day moving average. So still looking for a short-term bearish bias on the sterling dollar to head down towards potentially 1.2340 support level. However, if you start to see a break up above the 1.2460 level, that means an hourly close above 1.2460, then this short-term bearish bias will be invalidated to see a squeeze up to test the next resistance level at 2550, which is the former minor support level of 5th of September and 26th of August, and as well as the upper boundary of this key medium-term descending channel now acting as a resistance at 2550 as well. All right, so still having that short-term bearish bias on the sterling dollar, as long as key short-term pivotal resistance at 1.2460 is not surpassed to the upside. All right, so now very quickly let us cover the stock indices, the benchmark stock indices. Let us start the Asia benchmark indices first. So over at Asia benchmark indices, the Hang Seng Index or the Hong Kong 33, still recall that on the Hong Kong 33 last Friday, we do have a bullish bias holding above that key support level at 17,930 level. Yes, today Asia session, right at the open, the Hong Kong 33 index attempt to test this level, but didn't have an hourly close below it and now trading sideways. But given the fact that we now has to start to see a rising US Treasury yield, so I'll be much more cautious to having a continue to have that bullish bias on that Hong Kong 33 index, given the fact that of this rising US Treasury yield. So I'll be much more switching to a neutral stance for today. That means neutral between 17,790 and last Friday high at 18,370. So from a bullish bias, I'll be switching to a neutral bias, given the fact that that US Treasury yield is rising, and that could actually temper, we call it any signs of bullishness on the major stock indices. All right, so turning neutral between 17,790 and 18,370 for now. Unless we start to see an hourly close below 17,790, then potentially we could see a further breakdown on the Hong Kong 33 to test the 21st of August swing low at 17,570 / 17,370 support level. Okay, so switching for a neutral stance for now on the Hong Kong 33 index. So now Japan 225, Japan 225, the cash market is actually closed today. So what you are seeing over here is the cash market is closed, but the futures market is still open. So for the Nikkei 225, last Friday, right, we do have a neutral stance between 33,800 and 33,490, and very clearly last Friday price action during the US session broke down below 33,490. So we'll be switching towards a bearish bias to play that short-term pullback or short-term pullback towards the 5-day moving average, and also towards this pullback support level of that former descending range resistance from 16th of June 2023 high. So using 33,490 as my key short-term pivotal resistance, look for a further potential push down to retest this support level at 33,280, followed by 33,030 level, which is also the 5-day moving average acting at support level. So flipping to a bearish bias on the Japan 225, using 33,490 as my key short-term pivotal resistance level. However, if we start to see a break up above 33,490, then we could see a continuation of that medium-term bullish bias towards the next resistance level at 33,800 for the Japan 225 index. All right, now going on to the European indices. So still no change on the German 30 index. So using that 16,045 level as my key short-term pivotal support level, still looking for a potential push down towards this support level at 15,770/15,700 level on the German 30 index. However, if we start to see a breakup above this 16,045 level, then this short-term bearish bias will be invalidated to see the German 30 index for a squeeze up or a push up to test the next resistance level at 16,240. So I repeat, still maintaining that bearish bias as long as 16,045 key short-term pivotal resistance is not surpassed on the German 30 index. Okay, now moving on to the US stock indices. So on the Nasdaq 100 on last Friday, we do have a neutral stance. So given that the lower neutrality level has been taken out at 15,360 level, so we'll be flipping on to a short-term bearish bias on the Nasdaq 100, but I do not want to have a key short-term pivotal resistance to so tight at 15,340. So I'll push it up to 15,540, which is the swing high, which is a very clearly this minor range resistance that is in place since 4th of September. So 15,540 will be my key short-term pivotal resistance for that bearish bias for today on the Nasdaq 100. So a clear breakdown below 15,085 potentially could take us down much lower towards the next support level at 14,750 level on the Nasdaq 100. However, if we start to see a break up again on the 15,540, then that short-term bearish bias will be invalidated to see a squeeze up to test the next resistance level at 15,800, which is the swing high of 28th of July and 29th of July this year. So flipping to a bearish bias on the Nasdaq 100, holding below the 15,540 key short-term pivotal resistance. Now moving on to the Dow Jones Industrial Average, we call it the Wall Street 30 index on our platform. So similar on the Nasdaq 100, the Wall Street index broke below the lower neutrality level at 34,760. So we'll be flipping to a bearish bias, but I do not want to have a pivotal resistance that is so tight around 34,760. So still using the very clear swing high area that failed to surpass on 16th of August, 31st of August, and last Friday, 15th of September, which is at 35,050 level. So using 35,050 level as a key short-term pivotal resistance, looking for a bearish bias again on the Wall Street 30 index to test 34,520 intermediate support. A break below it potentially could take us down towards the next support level at 34,335. However, a breakup or a clearance with an hourly close above 35,550, then this short-term bearish bias will be invalidated to see a squeeze up to test the next resistance level at 35,340. So all in all, flipping to a bearish bias on the US Wall Street 30 index. So now let's move on to the commodities market. So on the commodities market over here, let's take a look at spot gold. So for spot gold, last Friday, we do have a bullish bias. So spot gold over here, it tests that resistance level 1928/32 before pulling back again on Friday. And right now during the Asia session, it attempt to actually shape another a rebound of the 200-day moving average. So I'll be using a Titan key short-term pivotal support level for today at 1913 level to maintain that bullish bias on spot gold 1 hour on chart on the spot gold. That's the XAU/USD. So as long as 1913 key short-term pivotal support holds a break above 1932 level, which is the 50-day moving average, potentially we could see spot gold to move up much higher to retest the next resistance level, which is at the 13th of August and 31st of August minor swing high area, acting as resistance at 1948 level. So still maintaining that bullish bias on spot gold. However, a breakdown below 1913, then this bullish bias will be invalidated to see a retest at the key medium-term support level at 1903. Then now moving on next, last one will be the WTI crude, will be the Webster's Texas oil. So Webster Texas oil, if you recall last Wednesday, we do have a bullish bias as well, 9120/60. Resistance level has been met, but there's no clear signs of exhaustion yet on the chart of this WTI crude, which is Webster Texas oil. So I'll be using a Titan key short-term pivotal support level at 89.30 level, which is close to last Friday's swing low area and also the lower bound. Also, last Friday's swing low area that was tested, which is the lower boundary of this minor ascending channel from 29th of August. So using the Titan key short-term pivotal support at 89.30, maintaining that bullish bias to see the push up for to see a further push up to test the next resistance level at 93.80 on WTI crude oil. So what's 93.80? So 93.80, if we go to the daily chart over here, it will be this medium-term swing high of 10th of October and 4th of November last year. Okay, so that's a pretty key resistance to watch as well. So still maintaining that bullish bias on West Texas oil, holding above a Titan key short-term pivotal support at 89.30 level. However, if we start to see a breakdown with an hourly close below 89.30, then potentially we would see a start of a what you call it, a much more substantial corrective pullback to retest the 20-day MA, acting as a support at 84.90 level. All right, so with that, I come towards the end of today's daily dose of market insight, and I wish you all a great day ahead, and I see you all again tomorrow. Thank you.